Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the banking sector as first quarter earnings kick off. And of course, we're starting with the big boy, that is Republic Financial Holdings Limited for their first quarter ended December 2022, their first fiscal quarter, that is. So the group would have reported marginally improved earnings. Let's take a look at what some of those drivers would have been for that performance and what investors may expect in the coming months ahead. All right, so turning to that RFHL result, and the group reported an earnings per share figure of $2.45 per share, which was a very marginal, as mentioned, 0.8% increase from the first quarter of 2022 of $2.43. Now, operating income and operating profits overall were much healthier and certainly marked a much more significant improvement. Net interest income, for example, crossing that $1.1 billion figure, $1.108 billion to be exact, versus a $1.015 billion figure in the prior comparable quarter, or a 9.1% increase. Overall, operating income was 11% higher at $1.646 billion compared to $1.482 billion in the prior comparable quarter. Operating profit surged 20.5% from $612 million odd dollars to $738 odd million. So certainly a very notable increase in that operating profit figure. This was, however, offset by some one-off impairments related to the Ghanaian subsidy of RFHL, with some debt restructuring in the works for Ghanaian sovereign, domestic and international debt. That would have led to a significant credit loss impairment or credit loss expense for the group, which would have pegged back overall profits attributable to equity holders with growth of just 1.1% after all other factors have been taken into consideration, improving to just about $400 million from $395.6 in the prior comparable quarter. The revenue story, or the operating income story rather, was a pretty positive one overall, with that other income improving by just about 15% from $467 million to $538 million in that bright green segment, with net interest income, as mentioned, improving that 9% from $1.016 billion to $1.108 billion over the comparable quarters. Now, from a profit by tax by geographical segment perspective, it was mixed reading, but broadly positive. The one notable, or two notable rather, segment changes was that a 5% decline in RFHL's major operating segment, Trinidad and Tobago, in that red declining by about 5% from $298 odd million to $283 million, and Ghana in that brown segment declining swinging from a profit of before tax of $40.5 million in the prior comparable quarter to a loss of $114.2 million TT equivalent in the most recently completed quarter. And again, that was attributable mainly to that credit loss expense. Whether or not there would be more credit loss expenses or impairments related to that Ghanaian restructuring in subsequent quarters remains to be seen. On a positive note, however, EC, or the Eastern Caribbean, did improve some 73% in that pinkish segment from 64.6 to 111.8 million in PBT. Cayman Islands surging a 130% odd from 53 to 122.1 million TT equivalent, and Guyana also improving from 49.8 million to 65.1 million quarter over quarter, 30% odd increase. So overall, a very broad improvement in most of its segments, with some modest declines in the Trinidad and Tobago jurisdiction, and of course that notable decline in the Ghanaian geographical segment. From a valuation perspective for shareholders, RFHL is trending towards relatively fair valuations on a trailing 12-month earnings per share basis. The group is trading, or the stock is trading at a $9.39 earnings per share, resulting in a 14.4 times multiple, which is pretty much in line with its historical multiples versus the first quarter of 2021 and 2022, where valuations were somewhat elevated. So certainly moving in the right direction in terms of overall valuations for shareholders. So at a price of $135.64, RFHL is trading at that 14.4x multiple, as mentioned, which is slightly above the banking sector average of 13.7 times, but does offer a relatively generous yield compared to the rest of the banking sector of 3.3% versus the sector average of 3.1%. So with that increased net interest income and overall operating income increase, the continued benefits of geographic diversification bearing fruit for RFHL, and with relatively fair valuations, Bourse is going to maintain its market weight rating on RFHL for the time being. Now, relatedly, the CLICO Investment Fund would have been terminated and is currently suspended, and investors would have received the proceeds out of the CIF fund during the course of last week. And with that, of course, roughly 90% of the value of CIF did comprise RFHL shares, with the other 10% comprising government bonds. Now, that RFHL price has been somewhat volatile since investors would have received those shares with fairly significant or elevated trading volumes over the past week or so. And we can see that there's been fairly significant volumes in comparison to roughly a 6,000 share average daily volume over the past 12 months prior to those shares being released to investors or former unit holders of the CIF. On the government bond trading side, which is the other component of the CIF proceeds, well, we can see that trading has initially started off fairly stably, with just about 1.3 to 1.5 million on average being traded. That price, the initial price of the issue price of the government bond would have been around 87 to 88 cents. That has since adjusted to about the 84, 85 cents level, with when priced against the yield curve, that price should be somewhere around that 84 cents level. So there should be some price stabilization going ahead for bondholders who would have, or former CIF unit holders who would have received these bonds and do expect or would have a need to sell these bonds over the coming weeks or months. Well, that's it for this week's report. For more information, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com. And of course, you can check out our website where all of our research is absolutely free at bourseinvestment.com. And you can catch us in today's Bigger, Better business section of the Trinidad and Tobago Guardian newspaper. Have a great week, and we'll see you next time on the Bourse Report.